The Warren Buffett Way is much more than just an investment book. It is a philosophy, a way of thinking about money and business. Hagstrom guides you through the strategies and mindsets that have made Buffett one of the most successful investors in the world. Whether you're an experienced investor or a curious beginner, this book will provide you with valuable lessons and tools to navigate the complex world of investments. Are you ready to join Buffett's school of thought? Keep in mind that this is just a brief introduction. The book is filled with nuances, anecdotes, and concrete examples that will help you better understand Buffett's ideas. So don't wait any longer and dive into its pages. This introduction will whet your appetite for the key ideas of the book. The Gospel of Value Investing. Forget fleeting trends and risky bets. Buffett preaches the gospel of value investing, which involves buying undervalued companies with solid economic fundamentals and long-term growth potential. Think of it as snagging gold nuggets at a bargain. Circle of competence. Don't try to do it all. Identify your circle of competence, the areas where you have knowledge and experience, and focus on investing in companies within that circle. For Buffett, this meant staying away from technology and concentrating on sectors like insurance and consumer goods, where he could properly assess the intrinsic value of companies. Mr. Market, your bipolar friend. The market is like a bipolar individual, sometimes exuberant and irrational, and other times depressed and pessimistic. Buffett capitalizes on these fluctuations by buying when nobody wants to and selling when everyone is infatuated. Don't get caught up in collective euphoria. Think with a clear head and seek opportunities when the market is in panic. Think like an owner, not a speculator. Don't view stocks as pieces of paper to be traded quickly. Become a partial owner of a real business and think about its long-term success. Buffett cares about the financial health of the companies he invests in, seeking those with sustainable competitive advantages and a strong track record of profit generation. Be patient and disciplined. Value investing is a marathon, not a sprint. It demands patience, discipline, and the ability to stay calm in the face of market volatility. Buffett is famous for his long-term investment approach, holding on to winning companies for decades and letting the power of compound interest work its magic. Chapter 1. Warren Buffett's Investment Philosophy. This chapter lays the groundwork for Warren Buffett's investment philosophy, which revolves around fully understanding the business before investing. Buffett values long-term investment and looks for companies with lasting competitive advantages. It introduces the concept of the circle of competence, urging investors to confine themselves to areas they fully comprehend. Chapter 2. The Characteristics of Warren Buffett. Hagstrom delves into the personal and professional traits that contribute to Buffett's success as an investor. It emphasizes discipline, patience, and a rational approach to decision-making. Buffett's tireless work ethic and his ability to learn from history are crucial aspects of his approach. Chapter 3. The Principle of Investing in Companies You Can Understand. This chapter delves into the importance of thoroughly understanding companies before investing. Buffett advocates for the need for solid knowledge and a clear assessment of the business as prerequisites for successful investment. Chapter 4. The Principle of a Sustainable Economic Moat. It explores the concept of an economic moat, or sustainable competitive advantage. It argues that companies with these advantages can maintain strong long-term returns. Buffett has been a proponent of investing in businesses with strong entry barriers and lasting advantages over the competition. Chapter 5. The Rule of the Sophisticated Investor. Details how Buffett values stocks and selects companies. It focuses on the quality and durability of the business, emphasizing the importance of understanding financial reports and assessing the overall health of a company. This chapter illustrates Buffett's meticulous approach to investment decision-making. Chapter 6. The Rule of Margin of Safety. Introduces the fundamental principle of investing with a margin of safety. Buffett suggests that investors should buy stocks below their intrinsic value, providing a safety cushion against market volatility. This approach minimizes risk and protects the long-term investment. Chapter 7. The Rule of Buy and Hold. Focuses on the strategy of holding long-term investments, highlighting patience and consistency as key to achieving sustainable returns. Buffett argues that successful investors should avoid market timing and maintain a long-term perspective. Chapter 8. The Rule of Overhead Expenses. Addresses the importance of minimizing costs and expenses associated with investment. Hagstrom shows how efficiency and cost management contributes to higher net returns, following the principle that every dollar saved in costs is an additional dollar of profit for the investor. Chapter 9. The Rule of Concentration. Reflects on concentration versus diversification. Buffett advocates for the idea of investing in a concentrated manner in the best opportunities, arguing that this can be more effective than excessive diversification. It emphasizes the importance of careful investment selection. Chapter 10, The Rule of Staying at Home, highlights Buffett's preference for investing in familiar industries or within his circle of competence. It illustrates how this approach maximizes the investor's knowledge of the business and minimizes risk by investing in familiar and understandable areas. Chapter 11, The Rule of Evaluating Performance, addresses the ongoing evaluation of investment performance. Buffett suggests that investors should realistically assess their investments and adjust their strategy as needed. It focuses on the importance of learning from mistakes and past experiences to improve future decisions. Chapter 12, The Rule of Avoiding Permanent Losses. Buffett emphasizes the importance of avoiding permanent capital losses. It shows how significant losses can significantly impact a portfolio's resilience and suggests that capital preservation is fundamental to long-term success. Chapter 13, The Rule of Compounding, focuses on the power of compounding over time. Buffett illustrates how the steady accumulation of solid returns can lead to significant long-term investment growth. This chapter reinforces the importance of patience and consistency in the investment strategy. Chapter 14, The Rule of Keeping It Simple. Hagstrom explores Buffett's preference for keeping his investment strategies simple and understandable. It argues that simplicity facilitates implementation and minimizes the risk of errors. Buffett advocates for avoiding complex investments and sticking to solid fundamental principles. Chapter 15, The Rule of Maintaining Control. This chapter highlights how Buffett maintains control of his investments and is not swayed by market trends. It advocates for independence and decision-making based on solid analysis rather than following crowds. Chapter 16, The Rule of Quality over Quantity. Buffett emphasizes the quality of investments over quantity. This chapter explores how meticulous selection of high-quality investments can lead to sustainable returns and avoids the temptation of pursuing numerous lower-quality investments. Chapter 17, The Rule of Not Being a Trend Follower. Buffett criticizes the trend of following fads and market advice. He advocates for independent thinking and the ability to make informed decisions rather than blindly following market trends or popular opinions. Chapter 18, The Rule of Thinking in Terms of Ownership. Buffett suggests that investors should think of themselves as owners of the companies they invest in. This approach shifts the mindset toward a long-term perspective, encouraging decision-making that benefits investors over time. Chapter 19, The Rule of Not Trying to Time the Market. Buffett dismisses the idea of timing the market and argues that successful investors do not try to predict short-term movements. Instead, he advocates for a steady, long-term approach, avoiding the volatility and risk associated with market timing. Chapter 20, The Rule of Infinite Patience. The book concludes by highlighting Buffett's infinite patience as a crucial trait for success. It emphasizes how the ability to withstand short-term market pressures and maintain discipline over time is fundamental to achieving consistent results. Some key conclusions that can be drawn from the book include: long-term focus. Buffett has achieved significant success by investing for the long term and holding stocks for decades. Patience and the ability to withstand short-term market fluctuations are crucial. Value over price. Buffett advocates for investing in undervalued companies with solid economic fundamentals and sustainable competitive advantages. The quality of the company is more important than the stock price at the time of purchase. Deep understanding. Before investing, it is crucial to fully understand the business and its prospects. Buffett emphasizes the importance of staying within one's circle of competence and avoiding investments in areas not well understood. Avoiding fads and trends. Buffett advises against following fads and market tips. Instead, he advocates for independent decision-making based on solid analysis. Importance of patience and consistency. Infinite patience and consistency in applying principles over time are crucial for long-term success. Avoiding attempts to time the market and maintaining discipline are key elements of this philosophy. Each of these rules encapsulates an essential element of Warren Buffett's investment philosophy, providing a comprehensive guide for investors seeking to emulate his long-term success. These principles not only encompass specific strategies but also attitudes and mindsets that have contributed to Buffett's enduring success. Thank you for joining this exploration of the Warren Buffett Way. Remember, knowledge is the first step towards change. Now, I invite you to share in the comments which lesson impacted you the most. Don't forget to subscribe for more content on financial education and personal development. Together, we'll build a path to financial freedom. See you in the next video.